What's up guys, Logan here again with another video. Today I'm going to talk about the best stocks to sell put options on. So if you guys could take a moment to quickly hit the like button, also subscribe as it helps a ton for the channel. The amount of support has been crazy. Amazing people hopping in the Discord, so check that out below. We also have my credit spread for the week that did really well. This is one of them. Check out the Discord in the description if you want the plays, see all those credit spreads. So let's hop right into this video. Now you might be asking, well, what are selling put options? And that's a great question. So if you have options trading allowed on your Robinhood account, we'll talk about AMD because this is probably my favorite stock to sell put options on, and then we'll go into a couple other ones down the road too. But let's hop into AMD right here. So right now it's trading around $93. So if we go to trade options, you want to pick an expiration date, I would say, that's closer than further away. And yeah, you can get better premium if you pick it further out, but you have to remember selling put options for a longer period of time, like a month, means that the stock has more time to get to the price that you're selling, which the whole point of it, right, is to hold these into expiration and collect the full amount of premium, because you get awarded a credit when you sell a put. So like, let's say right now in AMD with a share price of $93.10, it dropped to $92.98. We could go down even to the 85. Let's do that, right? 83% chance of profit. I would get credited $84, and that would be credited directly to my Robinhood account. I could take that money, move it to my bank, buy something with it. I could buy a stock. But for me to do this, it would require me to have $8,500 worth of collateral, which if I go to review, you guys can see I do not have that as of right now because I have my money locked up in some spreads, but I do have $5,400, so I'll show you with other stocks down the road. Let's say you did put up $8,500 and you were rewarded $86, boom. I mean, this strategy is fantastic for somebody who has an account of maybe 20 to 30,000, 40, 50, even 100,000. Like, this is fantastic for when you get your account to that size, because with selling these put options, you got to remember, if the stock price does fall from, if AMD was to fall $8 from its $93 share price to $85, by expiration, you would then get assigned those shares. So you'd be assigned 100 shares, but you have the collateral, right? That's why I tell people, hey, if you want to sell put options, make sure it's a stock that you don't mind holding over the long term. So let's say it does drop to 83, right, and you expire. Well, you're still going to purchase 100 shares at 85. What that means is you put up your 8,500, you would now own 100 shares for the cost of 85, even though the share price is 83. So then you would be down from 8,500 to 8,300 on that, which isn't the biggest deal in the world considering I'm very bullish on AMD. If that was to happen, I would say just hold out for a little bit and you can make your money back, as AMD could go reach another all-time high, and then you could sell those shares. Yes, it would stunt your ability to sell more put options because you'd be holding all these shares, but at the end of the day, as long as you're doing this strategy on stocks that are consistent, they grow over time, and are good companies like AMD, right, and you're not messing with these pump and dump stocks or these pharmaceutical stocks, I think you're in a really good position overall. So if we look at other AMD choices, I mean, you could even go for the 87 strike, you'd get more premium, almost double the premium, but then your percent chance of profit is a lot different, right? You went from having an 83% down to 77. You have better credit, but now your runway is only $6. Yes, AMD could fall $6 from here to next Friday, but if you don't mind holding these shares, it's a fantastic strategy to make it an extra 140 bucks a week, completely passive. The stock can go up, it can go sideways, and it can go down. You'll still make money as long as it doesn't fall below the sell strike. So that's why this is one of my favorite strategies for passive income if you have the money, and this is not a very expensive stock. Now if we're looking at Microsoft, right, $230 stock, you would need $23,000 in collateral to potentially probably make $100 to $200. I wouldn't be mad if I got assigned 100 shares of Microsoft. They have a great dividend. I don't know many people who have $23,000 ready to just unload, to where you can find stocks like AMD where you have maybe $9,000 and unload some put plays on. So you can still get really good premium, and AMD is a pretty stable stock, and I like them over the long term. So this is by far my favorite one. You could even get riskier and say, hey, I want to do the 91 strike. You put up 9,000 to make 300, which is a fantastic probability and a fantastic credit. And you don't have to worry about like we're in spreads, right? You know, if you're selling 10 contracts of something and then buying 10 against it, and then you do get assigned those shares if it falls below the strike, that could be tough because you have 10 contracts. But just with one, I mean, you could be collecting $310 in a week for just having $9,000 put up. 9,100 to be exact. Now another very popular stock to sell put options on is definitely Workhorse. Their premiums are still pretty solid most of the time, as you can see here. Like the premium and the runway isn't as good as it was on AMD, but that's why of course AMD is my favorite stock to do the strategy on. Another fantastic stock to run the strategy on would be Snapchat. They had a $2 movement in this past week. So if we go to trade, it's at 53.69. We go to Friday's expiration on this stock and we look at these premiums. You could pick up a $52 put, sell that, make $101 for putting up 5,000, which is a fantastic return. I mean, that's 2% in a week. That's a fantastic way for passive income. You know, like the worst comes to worst, Snapchat falls from 53.72 below 52, you would get assigned 100 shares at a $52 strike, so $5,200, and now you would own Snapchat shares, which I'm bullish on in general. I think Snapchat's a great company. They're doing a lot of good things, making good ad revenue as of lately. So if you're looking at these stocks, that's why I love the social media stocks. They have that money coming in. They're super stable and they're so big. Their share price is generally stable as long as they don't have earnings. And that's one thing that you should look at too if you're gonna sell put options is what does that stock have to do that week? Do they have earnings? Do they have this catalyst driving them? Is there a potential that they could go to the downside? Because if you kind of look at what's going on, the price action, watch the charts, you can set yourself up nicely selling these put options. So Snapchat's a fantastic one, and you could even close this early. You don't have to hold it to expiration. As long as the share price doesn't fall closer and closer to your strike, you could always close out at maybe $50. Like we just watched the 52 put go from 101 to 98. I mean, that was $3 just while I was talking. So it's really cool. That's why I like Snapchat. Stock price goes up, it goes to the side, it goes down, and you're still making money. So I'll bring you guys to the last stock that I really like to sell put options on to get a decent amount of premium. Now this stock right here would definitely be Twitter. I like Twitter a lot. You can see right here, you could sell the 46 put, which just gives you $2 runway on a stock like Twitter that maybe moves 10 to $15 in a whole year, right? So $2 in a week, that's the run room you have down here. So you could go sell that, make 50 bucks instantly, it gets credited to your account, and then for the rest of the week, you would just have to watch and make sure you don't fall under 46. But if you did, you would collect 100 shares at $46, so you'd put 4,600 up to make 50 on this credit, which is, I think, pretty solid considering you don't have to actively trade, actively manage anything. You just have to make sure the share price doesn't fall below it. So if the charts look good and the stock looks bullish or oversold, it's always great to sell a put option on this play. So those are really the only risks. This is what I like about this strategy a lot, right? Is when you do spreads and I'm messing with SPY and maybe I sell 5 contracts, buy 5. If I was to get assigned 5 SPY contracts, almost $200,000 worth of SPY shares, right? Which is a big deal, I would say. But with this, it makes sure that you have that collateral in your account. That's what's really nice about it. So if you do get assigned $4,600 worth of Twitter, it's not a big deal because you have the funds. But if you were to get assigned and you're playing a spread to where you sell and then buy and have the collateral amount, right? That's the difference between doing a ton of spreads and selling a ton of puts. Yes, you can collect less premium selling puts compared to spreads, but the risk is far less selling put options individually, like if you're just selling the put. But you could still, right here, right, February 12th, we're looking at it, the $42 put gives you $6 of run room to collect $115 by just putting up $4,200. Fantastic, and it's just 3 weeks of waiting. So this strategy is great if you have a big account, and I would say personally just keep trading spreads until you get your account to over 50K, and then you could start selling puts, because then if you get assigned, you now have 100 shares, which is fantastic because then you can do so many other strategies and options once you hold 100 shares of a company. Definitely check this strategy out. If you guys haven't yet, paper trade it and just get comfortable with it. That'll be it for me in this video. If you guys want to check out my Spotify, you can check that out over here as well, just Logan Ladge on Spotify. But I want to thank you guys for all the support, as I will have so many more options videos coming in the future. I want to upload like 3 times a week because I just want to incorporate you guys more into my mindset and how I see this, all the different types of strategies, so that if you ever get discouraged when trading options, you know that there's so many other strategies and techniques and way to do it to where you can collect premium, Maybe you play some covered calls, you could straddle. There's so many different techniques to play with. I really appreciate all the support as always. Make sure you leave a like and subscribe on this video. I'm gonna touch more on credit spreads here shortly too. So I really appreciate all the support from you guys, and it means the world to me. I'm excited to continue making money off the market with you guys, so let's keep it up. I'm really excited for the future, and I will see you guys in the next video.